What's good? What's good? Good morning. Good morning, fam. Good morning. Good morning. Welcome back to Secure the Bag, where we break down money, markets, and mindset so you can move smarter with your money. I'm your host, Stephanie Beard, aka Laker Girl. And now today, we are talking about something serious. It is serious out here in the United States, in the world, period. It is very serious, you guys, because we're talking about war, global conflict, and how it quietly but powerfully affects your investments. So before I get into it, I got to get the disclaimer in because I am not a licensed financial advisor. This is not financial advice. Everything is for education and entertainment purposes only. So please trade at your own risk tolerance. All right, you guys, we're going to jump right on into it because when war breaks out, your money feels it. So let's tap in. You could put up that slide one. And this is why war moves the market. War creates one thing that Martin, the market hates, and that's an uncertainty. Uncertainty. We talked about uncertainty before because investors don't like knowing what's next. So what happens? Stocks get shaky and money starts to move fast, and then fear sets in. Fear enters the market because war can impact the oil supply, and that is huge right now. The oil supply, you guys. You'll see it all over the news. It's all about oil and energy right now. It also affects the trade routes. Right now, Qatar, if you're looking at the news, it's offline. So that is going to affect the oil prices and gas prices out there. Global stability. And then also it affects government spending. And all of that hits Wall Street. All of it will hit Wall Street. And it's not good, and that sets the fear in everyone. And when that happens, when the war disrupts the global system, that means that that money depends on. And when conflicts start, it really affects the supply chain, which means, shipping delays are going to happen. And of course, like the block routes, it's hard to get, these containers through. The energy flow, which is oil and gas shortages, is going to create that. Currencies, as I said, flight to stronger economies. And then the fear, investor confidence, the fear is there, the fear of unknown outcomes. So markets are forward looking. They don't wait for damage, they react to expectation of damage. So even rumors of war can move billions. So war doesn't just destroy land, it really disrupts the flow of the money. You could put up slide two. Um, when news of war breaks, you guys, the market usually reacts like this. The stocks drop, as you can see, and stocks are dropping. But if you notice, what's up is energy and oil. The stocks drop, volatility spikes, investors, they panic, and you'll see tech stocks dip. Right now, tech stocks are down, you guys. If you look at it, Nvidia, Tesla, Meta, all those Apple, those stocks are down. But growth stocks pull back. They pull back because of war. And overall indexes will go red. You see that the Dow, the S&P 500, the NASDAQ, they're all in red. This is called a risk-off environment. And what that means in translation, people pull money out of risk and move it somewhere safer. Okay, you could put up slide three. Now, here's where it gets interesting. Well, while some factors fall, others rise. And so the winners during war is energy, oil and gas. Prices go up when supply is threatened. Defense stocks will go up. Military spending increase. And then there we go with the gold and precious metals. Those are the safe haven assets. Commodities like food, wheat, etc. Supply disruptions equal higher prices, and money doesn't disappear. It really is just it's just rotating. It's just truly rotating, you guys. So don't be afraid, but just watch it. Be smart about it. Be disciplined. Be patient. You got to be patient when it comes to things like this. And so oil prices rise due to the supply risk and companies' profit from scarcity. And then, as of course, government. Every time you hear a mention of war, defense stocks will go up. Government will increase military budgets. That's just how it works, you guys. That's just how it's going to go down. So that's why you have to stay. That's why discipline and patience. You got to be there. You got to be very smart. This is when you're learning how to be smart and how to move that money. You can go to slide 4. And there we go with the safe havens. During war, investors look for safety. And that's where safe havens come in, which is gold and precious metals. The US dollar, treasury bonds. And you ask why? Because they tend to hold value during chaos. So when fear rises, these assets, they usually go up. That's usually the protocol. They usually go up. And when that happens, when that happens, you know, it's because it's been historically stable. It's backed by strong systems and trusted during crisis, which creates safety and growth during uncertainty. Now, during war, investors stop chasing gains. They stop chasing those gains and they start protecting what they already have. And you could go into slide 5. And this is where investors separate themselves with the short term and the long term, because short term equals volatility, panic selling, and uncertainty. Long term is recovery and opportunity, and create strategic entry points for yourself. And the historical patterns always shows market often dip during conflict and then recover as stability returns. And time in market beats timing the market. Okay, remember that time in the market beats timing the market. The same fear that scares people out creates opportunity for those who stay. So think long term when you're making these decisions. You go into slide 6. So as we always talked about here on Secure the Bag, and how you need to move like a pro, you got to stay calm. Please don't react emotionally. Don't do that because you will lose. Diversify. You spread your risk across sectors. Spread risk across sectors. Watch your rotation. Follow where money is going. Energy, defense, and commodities. Keep your cash ready. I'm telling you, keep that cash ready. That's how I made a little mint when the market crashed. Opportunities come during that fear. And always keep in your mind, think the long term, zoom out, don't get stuck in the moment. Do not get stuck in that moment, because most people will panic and they will sell low and they will miss the rebound. All right. Don't do that. Now, you could go into the top 5 stocks to get during this war, you guys. One of the largest oil and gas companies is Exxon. Exxon is one of the largest oil and gas companies in the world. So if you're looking to do anything, look at Exxon, and the ticker symbol is XOM. XOM. Energy is everything. And why it matters during the war is because, again, conflicts disrupt oil supply, and the oil prices will spike up, and energy companies profit from higher prices. You got to watch the oil price trends. Okay. Supplies disruptions in key regions. If energy gets tight, these companies will get right. Okay. The next one is the defense stock, which is Lockheed Martin. LMT is the ticker symbol. LMT. That's the spending giant. And it's a major defense contractor. Fighter jets, missiles, military tech, all that happens. And it matters because government increased military budgets during the war, and contracts each equal consistent revenue. So you have to watch defense spending bills and military aid packages. War increases demand and defense gets paid. The next one is Northrop Grumman. Northrop Grumman, their ticker symbol is NOC, which is Advanced Warfare Tech. And what it is, it specializes in drones. Drones are in cybersecurity and advanced weapon systems. Drones are very important during war. And why it matters, because modern warfare equals tech driven. and governments invest heavily in innovation. And you have to watch tech-based military contracts, as I mentioned, AI, drone warfare expansions. The future of war is tech. And this is where that money flows. This is where that money is going to flow. Number 4 is Barrick Gold. Barrick Gold, GOLD. That's the safe haven play. And it is one of the largest gold mining companies in the world. And gold rises when fear rises. And if you see right now, gold is up and investors move money into safety. You have to watch the gold price trends, inflation, and global instability. And when fear goes up, gold usually follows. And the last but not least is number 5, which is Goldman Sachs. Goldman Sachs is big money moves, and the ticker symbol is GS. And it what it is it's a major investment bank and financial powerhouse. It matters because institutions reposition capital during uncertainty, and financial firms profit from volatility, deals, and strategy. So you have to watch the volatility, which is VIX, and also watch for mergers and acquisitions and restructuring. When markets get shaky, smart moves get strategic. And this is how you have to think about this list. This is just about chasing the stocks. It's about understanding the sectors. You can take that down. It's about understanding the sectors. Energy equals supply disruption. Defense is government. Just remember this. This is how you remember it. Gold, fear, finance, capital movement. Follow the flow of money, not the noise. Okay. And I cannot go out without not saying, the underrated war play. And you know what that is. It's silver. Silver is the underrated war play. Silver versus gold. Silver secure the bag. It secures the bag because why silver matters during war? Because silver is one of those assets people sleep on. But during conflict and economic uncertainty, it can quietly become a major player. So keep your eye on that silver, you guys. Keep it on there. And what makes silver so different? It's a precious metal, just like gold, but it's also an industrial metal. It's used in tech and solar and electronics. And that combination is powerful. And how it affects war is that safe haven demand, just like gold. Investors move into silver during uncertainty. It's cheaper than gold. It's more accessible. And when fear rises, silver usually follows gold move. It's also a hidden driver. It's an industrial demand. Silver is used, as I mentioned, in solar panels, electronics, your phones, phones, the chips and everything in there, military tech. And during war, governments ramp up on these type of productions, and supply chain starts to tighten up, and that can push the prices up. Now, inflation hedge, and what often leads to increased government spending, currency pressure, inflation. Silver tends to perform well when money loses their value. So when the dollar starts to lose its value, that's when these precious metals start to gain value. So when you look at gold, because gold is a little more expensive, but when you look at silver, the difference is gold is definitely more stable, but silver is very volatile. And gold is definitely one of the institutional favorite, and silver is more of a retail and industry demand. But gold moves slower. But remember, you think a long term. But silver is bigger. You get a bigger percentage move when you look at silver. And silver can actually outperform gold in bull runs. And it's proven that. We look at January, but also drops harder. Just remember, it drops harder in downturns. So how you want to invest in silver is first, and number one is not the paper silver, which is stocks. The number one is you need to get into the physical silver, which is coins and bars. And I don't know if you've been listening to the shows, but Costco sells silver. That's the first place I go to look for silver. It goes fast, but Costco, if you are a Costco member, look in Costco first. Get the coins, get the bars, because it's a long-term store of value. And then again, we talked about ETFs, silver, track silver price. SLV, that's when we get into the paper. That's second. It's right behind the physical part of it. It's easy access through Robinhood and Webull and Thinkorswim. So you could get it there. And then there's also mining stocks, companies that produce silver. It's a higher risk with those, but you get a higher reward. So just keep that in mind. And just know the risk involved with this is it's always risk, you guys. It's always going to be that risk. And you got to be very careful of risk. Um, just move very smart, move very patient, and have a plan. You got to have a plan. You got to be strategic when it comes to war and Wall Street. Stay strategic, have a plan, move slowly, but do the slow move. And then, also just kick back, hold your cash, wait to see what is happening. Like Monday right now, just set the standards. It set the standard. And so you just sit and watch. Today I'm not making any moves today at all because silver is not the loudest asset, but it's one of the smartest plays in uncertain times. So you have to remember that and think of it like this: gold equals safety and silver equal opportunity upside. So I'm gonna get into my plays because that time went by fast. That's 7:18 already. Let me get into Robinhood right now because over the weekend, as I stated, there's always trading. There's trading over the weekend. There's trading after hours, and that's what was happening. Trading over the weekend and trading after hours. And silver actually was up $5 in after hours, but then people start to sell off again. They started to sell off, so it's very volatile right now. But that's okay. It's at $81.38. Last week it was at $75, so it went up. It actually went up $10 over the weekend. Then it dropped back down to let me see, and $6. It was at $75, between 75 and 78 on Friday when we spoke last, when I did my last show. So that's fine. It's actually it dropped all the way down in February. Listen, I'm gonna just tell you this: February and September is the worst month to do any trading. It's going to go down. So if you're going to do any trading, you're going to buy because the market is going to be red. But those are the worst months. Just be very cognizant of September being the worst, and then February follows right behind it. And as you have seen, and then off subject with the market right now. I'm going to say this, and the reason why we are in war, I believe, in my opinion, is because a chump wants to run away from these Epstein files. It is what it is. He is what he is. He done what he did with these girls. And anything to get that time and get that spotlight off of him, guess what? We're in war with Iran. Because he, the malignant sociopath narcissist that he is, he's trying to make us think, oh, let me go into war. So they don't think I'm this person graping little young girls. You know what graping means. So let me get back to secure the bag here. We building the bag here on Monday, you guys. That's what we do. All right. So getting into some of these stocks, as I already we already talked about the stocks. If you are going to do any trading, it would be the energy, the defense stocks, and things like that. So those are the ones. The APLDs, the other top 5, you guys, they are down. Opportunity is there. Those I speak on these all the time because during this time, these stocks are going to be down. APLD is under $30. It's at $27.59. It is up right now 31 cents, 34 cents. It was when I first looked at it, it was in the red, but right now it hasn't got to 35 cents. It's up 1.36% right now, but it's at $27.64. We do know that this stock will hit over $50. Again, think long term. You're thinking long term. IONQ, you guys. IONQ is down 28 cents right now. It is at $38.03. And if you don't know what IONQ, and go in and do your research, but it develops and manufactures quantum computers. The company was founded back in 2015, but the firm specializes in quantum computing and quantum information processing. Data centers are important in today's time, and that's what IONQ and IREN are about. Those are about data centers and the quantum computers. Now, right now, Irene Limited, IREN is up just 17 cents, 18 cents. It's going back and forth. It's only up. It's not up a lot. It's only $41.18, but that's also a $50 stock or more. So just remember, you guys, during these times, be smart, think long term. Let's get into SoFi. SoFi right now is up 9 cents. It's $17.87. It's going back and forth. A good opportunity because this is under $30. It's going to hit $50. It's going to hit $100. It's going to take some time. As I said, it takes the scenic route. And then there's Lyft. Lyft, the baby stock, which is at $13.64, the cheapest stock on this list today. And the reason why Lyft is going to stay cheap until it is acquired, and it will be acquired. It will be acquired by Google or Tesla eventually. So those are the 5 stocks, you guys. You got to just remember, build your portfolio slowly. And then we have the ETFs. You got the SPY. Those are the baskets full of tech stocks and other stocks that you can't go wrong with. Let's look at Uber. Uber is down 33 cents right now. It's at $75. Uber is a stable stock. It's a stable company. Just know that. My particular stocks, I have some plays in silver, of course. Right now, once silver take off, I'm getting, the options that I have, I'm getting rid of them because it is going to take off because of war. And so I have an Irene option as well. Cryptocurrency is what we're going to talk about next week. This Friday. Cryptocurrency is what I'm going to get into this Friday. After cryptocurrency, then we're going to jump into options, you guys. We're finally going to get there. I just wanted to make sure I cover everything about stock purchasing and what stocks are in crypto and all of those things before we jump into the most riskiest trading, which is options. That is the most risk you could put in trading. And so we'll talk about that. We'll start that next week. I also have, let me see what's doing well for me right now. Let me see, Bitcoin, crypto is all in the green right now, which is good. Deutsche, and we'll get into that next week. I won't talk about any of it today, but right now, PCNG is down. And, that's an energy company. Let me see what's doing well. Meta is doing good right now. Meta is up $5.47, so that's good. It is a $653 stock. But again, as I told you guys, wow, I just got a notification. This is off subject. Experian had another data breach. People stealing people ID identification. They're stealing your information. You gotta be careful. I lock everything. I lock all my credit reports. But Experian just said that I just got a notification said Experian just had a data breach. I tell you, it's terrible. So anyway, back to securing the bag. Meta is up. Let's see what else is up. Let's see. Oh, Bank of America is showing that Boeing, which is airplanes. It's only up. It's not up a lot. It's up 74 cents. I'm trying to see what is up really a lot of money. Okay, Planeteer, PLT. This is a stock that I purchased at $20. $20. I purchased this stock at $20. I own 25 stocks. My average cost is actually $26.28. It is up at $7. It's up $7.44. And what PLT is, Planeteer, this was a stock that I watched for a very long time. Planeteer engages in business of building and deploying software platforms that serve as the central operating system for its customers. It operates through the commercial and government segments, The commercial segment focused on customers working in non-governmental industries. The government side segment is involved in providing services to customers that are the United States government and non-United States government agency. It platforms are widely used in areas such as defense, intelligence, healthcare, energy, and financial services, supporting data integrations, large scale analytics, and operational decision making. So I got into this a long time ago. Again, like I said, it was very cheap, but I did my research on it. It is it was a stock that grew, just like all of the top five I've told you about. This is where the stock will go. Right now, the stock is $144.78. I bought it. My average cost is 26.28. Let me look at my history on it and see that I what I actually purchased. My first time I purchased it back in, let's see. I bought it, the first time I bought it was, let me see. Here we go. May 17th, 2024. Actually, May 9th, 2024. I bought it for $11.03, actually. Yeah. Yeah. So, and I bought some options in it, made a little money off of it. But buying the stocks, I got into it and at $11. But then I went in and bought more and more and more as it went up. And now so I initially started at $11, you guys, and right now it's $144.78. And that was back in 2024. So we're what? We're not even into 2 years, almost 2 years since I purchased it. But look how it grew. So that's a long-term stock. And those top five that I've given you are long-term. I got to get out of here, you guys. We'll see you guys back here on Friday, the 6th. And let's see where we're going. We're going to secure the bag at that time, you guys. You guys have a great week, and we'll see you guys back here. Peace
Who
out.
love? Who love?